Hello, everyone, and welcome today to this educational presentation. Now, I'm going to be talking to you about trading with the power of the dynamic duo. If you're not familiar with what our dynamic duo actually is, it's actually two methods joined together. It's one of our most successful as well as popular trading packages we have for our students. And on top of that, it's really simple to apply. And when you combine these two methods together, they kind of form this synergy for consistency. Let me show you what I mean here. As we look at this chart in MAR, this is Marriott International. Most traders would look at this the way we've all been trained before and say, well, there's just a range market right in front of me, so there's really nothing that the market is telling me. I really don't have any idea, and therefore I'll probably stay out of this until there's a breakout to the upside or a breakout to the downside. This is the way we've all been taught. This is the way most traders trade. But remember, these are two methods that are specifically designed to increase your odds for consistency when they're joined together as a duo. Why? Because they focus on listening to what the market is telling them. So if we apply the dynamic duo, the first method is applied as a method to generate the signal. So as you can see here, a signal was generated right in the middle of that so-called range market. So where you thought you were basically going sideways, the first method generated a signal saying it was going up. Now, not all the signals are 100% foolproof, just as everything in life isn't 100% foolproof. So you need a way to kind of confirm or filter out the signals that don't have as high a priority as others. So this is what the second method does. It confirms the signal. It tells you whether you should take it or not. So as you see here, once we confirmed the signal, the stock went up 28 points. Now, I know a lot of you have never been trained this way. You've always been taught to listen to some guy in a blog or a chat room or listen to the so-called trading gurus after market on TV, or even to look at earnings or look at support and resistance. Well, the beautiful part about this is we made things simple for you. We know we're an educational company, so we developed a platform that is designed to educate you. This is the educational platform that actually teaches you how to trade with the dynamic duo. This is the PTS Primo Charting Platform, and all the examples and chart displays you're going to see today were taken from the PTS Primo Charting Platform. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. A little over a decade ago, I teamed up with Pro Trader Strategies with one goal, and that was simply to educate traders around the world. And I'm happy to say that we have students now in over 115 countries and in every state in the United States. We're teaching them our methods, and probably one of our most popular methods is the dynamic duo. And why is that? Well, you'll see that today, but simply it's because it's a really powerful but easy way to really fine-tune your trading, and on top of that, identify these high probability setups. It actually will generate the signals as you saw, but confirm or weed out the signals that don't have a high level of priority. So this is the beauty of the dynamic duo. Now, you're going to see the attention to detail we give in teaching you today. I want to go fast forward because I have roughly about 170 slides to share with you. So let's move right along. But before we begin, as always, we first have to share with you our disclaimer. I'm going to show you a lot of performance results using the dynamic duo today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, a lot of students of ours would like to get education on a daily basis, so because of that, we have a Twitter page. So we invite each and every one of you to follow us on Twitter. There's our handle right there. We would suggest copying that down because every day I post anywhere from 4 to 6 different postings about maybe some signals that have been generated that day, to little bits of financial wisdom, to education on why a signal or a method has generated a certain sign or setup for the market. So this is a really great way to educate yourself with our philosophy and our concepts. So please feel free to follow us on Twitter. Now remember, if you've come here today, as I often say, if you come here today thinking that I'm going to be like what you've heard in other webinars from other so-called educators tell you that what they think the market's going to do, if it's going to keep going higher, or if this drop we had today is going to stop and go back up, or what the best stock is to buy, or what the best stock is to sell, or what the perfect time frame is, you've really come to the wrong place. That's not what we do. In fact, that goes entirely against our philosophy. We will never tell our students what we think of the markets or what we think of a certain stock or time frame, because that's up to you to decide. You see, the reason why most traders fail is because we've always been taught, well, let somebody else decide for me what I should trade or what the perfect time frame is. And that just doesn't work. I mean, if it works so well, why do 80 to 85% of all traders fail? It's because it doesn't work well. The reason is when you blindly follow someone along, like in a chat room or a trading room, you're trading their persona, you're trading their style, you're trading their risk parameters, and they may not be comparable to what you have. So therefore, you'll second guess the signal, you'll get out too early, you'll get in too late, and that will cause a series of losses, and you'll say, this just doesn't work. So that's why we stress to teach you basic formats. Doesn't matter if you've been trading in a hedge fund, it doesn't matter if you've been trading for 20 minutes. Everyone gets the basic format, and then we work from there according to your expertise and your experience level. But everyone will learn the same basic way, and then we encourage you to make your own decisions. This is the only way that I have found in my 44 years of trading that you become a consistent trader. It's the exact opposite of what we've been taught. You will never reach that consistency by blindly following and taking signals from someone or something else. You have to make your own decisions. So therefore, as an educational company, we provide you with these high probability setups, with these high probability strategies. But there are a number of ways to trade them, and we teach you and show you all the different ways, but ultimately it's you who have to decide where you want to enter, where you want to exit, where you want to place your stop. Or even if you want to trade that market at all, you can switch to a different market. It's entirely your choice, and it should be, because we want to make you a consistent trader, and doing otherwise would be actually be detrimental to you becoming a consistent trader. So, as you can see, my goal is not to force feed you signals. Obviously, it's not to tell you what I think of the markets or the perfect time frame. It's simply, as an educator, to teach you how to trade with the specialist edge. A good educator does not trade for you. He teaches you how to trade. And this is the same way I was taught some 44 years ago, what turned my trading around when I was struggling, and hopefully we'll be able to do the same for you. So once again, this is an educational classroom today, so please ask me as many questions as you'd like. But we like to do things a little bit differently here. I like to keep the questions to the very end. So if you do have some questions, kindly write them down or remember them, and I promise I'll get to each and every one of them at the end of today's class, probably in the next 40 minutes or so. The only question I will answer is this, and that is the most popular question. It's, are you recording this? Yes, we are. We record all of our webinars on a weekly basis. So if you have to leave early, or if you're having some tech issues, let's say you can't see or hear me clearly, oftentimes if you log off and then log back on, the problem will be resolved. Many times it's just your own internet connection. But if you're still having difficulty, don't worry. You'll all receive a link to this recording today, okay? So please remember to ask questions at the very end. We have a good crowd here today, and as I stated, I have a lot of slides to share with you because I really want to teach you how well this dynamic duo package really works. So please wait till the end to ask questions. All right, with that stated, let's begin today's class. And remember, I've stated before, I didn't say it today, but I've been trading for over 4 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist where I made markets at about 50 or 60 stocks. So I traded all environments. I traded through the crash of '87 and the market that followed. But believe it or not, the first year or so of my trading career, I struggled tremendously. I was doing the same thing that many of you probably have done or are still doing, and that's listening to outside sources to tell me how to trade. By outside sources, I mean looking at too many indicators. If you would have seen my screen back then 44 years ago, I had tons of indicators. Following too much fundamental news. I was looking at every economic announcement. I was looking at all the earnings. I was waiting for all the news to come out, okay? It's a wonder how I could even trade because I was waiting for so many things to come out. I was also following all the so-called trading gurus, listening to them, what they were telling me what I should buy or what I should sell. And guess what? Nothing worked. Even though we had been taught that all those things are supposed to have really high probability for success, support and resistance, volume, Fibonacci retracements, nothing worked in terms of consistency. So I struggled my first year. I didn't make a dime, even though I was on the floor. And people thought, well, gosh, you have a license to steal. You're on the trading floor. No, I didn't. In fact, I didn't think I was going to be on the floor for that much longer because I couldn't really make ends meet. I was lucky enough to have some mentors who were specialists themselves who were able to teach me the same things that I teach you, my students around the world. And these are the things that have sustained me. And remember, one of the first things they taught me, because they saw what I was focusing on, support and resistance, volume, economic indicators, earnings reports. They said, Steve, the market you're trading, regardless of what time frame or direction, tells you everything you need to know. And I said, wow, I never thought of that concept before. You mean the chart in front of me, the very thing I'm looking at, the very thing I'm trading, tells me everything. I don't have to listen to these guys on TV. I don't have to wait for the earnings to come out. I don't have to wait for the economic indicators. I can just look at the chart. And they said, yeah, that's just about it. See, as traders, we're always taught that the more complicated our trading plan is, the more indicators we pile on, the more things we listen to, the more people, chat rooms and trading rooms we go to, we'll be more successful. But in 44 years, I've learned that it's actually the opposite. It's the stripping away of those things, what my mentors called useless noise, that actually makes you a more consistent trader. There's no high levels of consistency by following those things. If you simplify your trading and learn to listen to the market in front of you, that's where you get onto that road to success, what I know you're searching for. That's what changed my trading around, and hopefully I'll be able to do the same for you. Now, the trouble is we've never been taught to listen to the market. Someone could say, well, okay, that's a nice metaphor, but I don't really know what that means, listening to the market. Well, I'm going to share with you two methods today to help you listen to the market, because why? They're based on market behavior. By market behavior, we mean just a few simple indicators or tools or patterns that are generated from the market, not from some guy in a chat room, not from some economic indicator, not from support and resistance, not from the institutions, but from the chart in front of you. Okay, the first one is strategy number 4. You've heard me talk about it before. This was the very first strategy my mentors taught me, and I still use it in some capacity today in my own personal trading. Now, it's a pattern recognition strategy. That means that the signals it generates are based off a pattern. Remember, this is all market behavior. It's based on a pattern that repeats itself over and over and over again in any market and in any time frame. So this is just not a stocks only type strategy. I don't care if you trade currency pairs, if you trade Bitcoin, if you trade commodities, you'll still see this pattern occur over and over again. If you trade a 1-minute time frame or a monthly bar, you'll see it appear over and over again. Now, it was originally designed for traders looking to catch momentum. Remember, I started on the floor of the stock exchange. We were looking to trade for 1 to 5 minutes tops. We didn't hold anything overnight, okay? But we've designed and developed ways to hold it for a week, a month, even years if you'd like to do that. It only uses one indicator. That's how simple this great strategy is. And I'll tell you what that indicator is. It's the 50-period moving average. So let's look at an example right here, okay? A few examples just to give you an idea of how this works. I can't divulge what the pattern is. That wouldn't be fair to our students around the world who pay good money for this. But let me show you some examples right now, okay? As you can see in VRSN, this is an older example here, price is above the 50, so that means strategy number 4 only generates buy signals above the 50, and it'll only generate sell signals above the 50. In other words, you will never see a signal to go short if the price is above the 50. This is how you increase your odds for consistency, okay, by listening to the market. All right, a buy signal was generated right here, and 20 points to the upside in the next couple of weeks. Not a bad little trade, right? It happens on the downside as well in PINS, all right? As we can see, we're below the 50-period moving average. So what is that telling us? It's telling us the overall trend is down, so the strategy looks for this pattern to repeat itself to generate a sell signal. And one was generated right here. And as you can see, the stock fell 10 points. Now, one of the best things about strategy number 4 is that if the trend is strong enough, don't feel as if you missed your chance, because it will continue to generate signals all along the way, as you see here. Now, I know a lot of you are saying, oh, well, that's great. So why do we need something else? Let's just trade strategy number 4, right? Well, you could do that, and a lot of our students do, but there are still times when strategy number 4 will go into this kind of whipsaw action, and you'll have a series of small losses. For example, here's a sell signal in SIX at 6. It meets all the requirements. The pattern has been found. We're below the 50, so a sell signal was generated. And look what happened. It continued to go higher. Now, price is still below the 50-period moving average, so a sell signal can continue to be generated as long as the pattern emerges. And it did right here. It appeared right here, so another signal was generated. Now, if you hadn't been stopped out in the first trade with a loss, Let's say you decided to double up. You wanted to average up. You wanted to sell some more. Okay, that's what a lot of students do. So you sell some more, and then look what happens. Now we are above the 50-period moving average. We shouldn't be going short, and we've most likely been stopped out. So we have our first loss. We start to think, wow, this doesn't really look very good. I became a member of this course, and my first trade, I already lost two signals here. But you continue to have faith, you hold on, and as the trade unfolds, you see that we are still above the 50-period moving average, even though price settles back a little bit. But two buy signals have now been generated. So now you say to yourself, well, this must be the real signal because price really hasn't gone down that much. So I'll double up here and buy now because price looks like it's going up. We're above the 50, and I'm going to make all that money I lost and some more. So you double up and buy here, and then this happens, right? Okay. Now, this is a worst case scenario. It doesn't happen all the time. So we all know that not every signal is going to be successful. It's just not the way life is. You're going to have some pitfalls every once in a while. So we have to look for something that's able to confirm these signals, to tell us if these are the right ones to take, or maybe filter out as best as it can the ones that don't hold a high level of probability. And we have that with the second method in the dynamic duo. That's the PET-D. We use that as a confirmation tool. Now, you've heard me speak about the PET-D before. It's probably one of our most popular tools as well. Why? Because it's so great at determining the short-term trend. For example, in this chart right here, most traders would say, oh yeah, we're definitely in an uptrend. You've got to buy this. And then this happens, right? Look familiar to anybody. The minute you buy, it goes straight down. Well, when you apply the PET-D color bar tool, what it does is it colors the bars. Green for uptrend, red for downtrend. So a series of green bars will tell you that the stock, the future, the currency pair wants to go higher. And we knew that well back here, well before it was making its highs. Now, even though the PET-D is not a predictive tool, it doesn't predict where the top is, it doesn't tell you where the bottom is, it's very sensitive. So we knew well in advance to get out of this uptrend before it started making these new lows. Now, we can use this as a confirmation tool because once we know the direction we should be trading, we can confirm if our signal is in sync with that. And we can also use it to filter out these bad signals. Now, when you combine these two things, when you combine strategy 4 along with the PET-D, you have this synergy for success. We call this our dynamic duo. That's why it's one of our most popular trading courses at Specialist Trading and Pro Trader Strategies. Now, I'm going to show you the simplicity of this and show you exactly how to apply this. For example, here are the rules for going long. You're only going to trade strategy number 4 buy signals that are colored green by the PET-D. Now, we don't mean that the pattern you're looking for, which we teach you in the course, needs to be entirely colored green, the complete number of bars. No, only the setup bar. That's the bar that's above the green arrow. So if you see a green arrow signifying that there's a buy signal for strategy number 4, that bar must be colored or outlined green. Now, conversely, if we're going short, if price is below the 50-period moving average, we're going to generate sell signals, right? Now, we're not going to color all the bars of the pattern red. We're just going to color the bar that is below the sell signal red arrow. If that bar is red or outlined red, that is a valid dynamic duo signal. So you've just given yourself a higher level of consistency. It's that simple. But remember, it's the simple things that work. When you strip away the useless noise and you simplify your trading, which is based on market behavior, what the market is saying, then you increase your odds for consistency tremendously. Now, let me show you the process on the PTS Primo Charting Platform. Remember, I developed this with Pro Trader Strategies with one goal in mind, and that was to make trading simple. We wanted you to learn how to trade the dynamic duo by using this. Having it at your side, you could check your work and make sure that you are in sync with the dynamic duo. So let me show you how this process is. Let's go back and look at that example in APA before. All right. Now here was the example that we have. As we see here, kind of have blank chart. Now, what we want to do first is apply strategy number 4. So on the platform, you'd click on strategy number 4 right here. And by the way, we teach you the rules. This is not black box. I'm just sharing with this to show you how simple it is, but you will know why a signal has been generated. Same thing with the PET-D. So you will know why these things are occurring. But to make life easier, we're clicking on strategy number 4, and in the drop-down menu, we see here all the different features we have. What we want to do is click on signal arrow, okay? Now, signal arrow, checking that, will generate all the arrows on the screen, telling us where there are buy and sell signals. Now, obviously, some signals work out great and others don't work out well at all. For example, this very first sell signal worked out pretty well. This one didn't work out well at all, okay? This worked out well, but all of these buy signals did not go at all. They kind of just went sideways to lower. So how do we filter out the high probability ones from the ones that don't have that high probability, that don't seem to work out? That's where we bring in the second part of the dynamic duo. That's the PET-D. Click on the PET-D and it automatically will color the bars, green or red. Now remember, in order to have a valid sell signal, the bar below the red arrow needs to be colored red. So starting here at the far left, we have our first signal. The bar below was colored red, so that's a valid signal. And look what happened. Potentially, you could have captured upward of 5 points in the next week. Not a bad little quick trade. But look at this next signal here, okay? We have a sell signal below the red arrow. What color is this bar? It's green. So that's telling us not to take it. It is not being confirmed by the PET-D. So we're not going to take that. And we didn't lose any money because look what happened. The signal went straight up after that. Now we're confronted with a buy signal now, okay? What is the PET-D telling us? Remember, not what some guy is telling us on TV saying, hey, I don't like that stock or I do like that stock. We don't care about what they think. They have no higher level of consistency than someone who's been trading for 2 weeks. What is the market telling you? Well, it's confirming it. It's saying it's a good signal because it's outlined green. So if you had taken that one, well, 8 quick points in the next couple of weeks. So far, you could have potentially captured 13 points and not had a losing trade. Now we're confronted with a cluster of buy signals. And we're not really going up. We're kind of going sideways to lower. But look, all of the buy signals, starting from here to here, were all colored or outlined red. So what is that telling us? It's telling us that the dynamic duo did not confirm them. So therefore, you would not have taken any of these and you would not have lost any money on this big downward move. Some of the best trades are the ones you never take. So where you would have had a series of trades, some winners, some losers, and in the end most likely would have either broken even or lost money. Now, by applying the dynamic duo, you potentially could have made 13 points without any losses at all. That's the beauty of when you apply the dynamic duo. Okay, so let's look at some recent examples using the dynamic duo and the signals. I'm going to share with you the process on the platform, okay? Most of these are just happened within the last month, some within the last couple of days. Okay, here's an example in VCNX. VASNX, as we can see, kind of looks like nothing's happening. Once again, most traders would say, Steve, this is a directionless market. I've always been taught never to get involved in one of these markets because they just go sideways, and that's where you lose money. And the signals are not very good, okay? Most likely that person was relaying something that was taught to them by an educator, taught to them by some guy in a chat room. But what is the market telling us? Well, we look for that pattern. Remember, the first portion of the dynamic duo generates a signal. Now, you'll be able to spot these, just by eyesight because that's what we teach you in the course. But to check your work, you would click on strategy number 4, and in the drop-down menu, click on signal arrow. And so let's see if you're correct because you think you saw a buy signal, and you are actually right. A buy signal was generated right here at the beginning of February, a little over a month ago, okay? So even though the stock went up a little bit, basically been going sideways for the past couple of weeks. Sometimes you have to wait, but as long as you're not stopped out, why don't you confirm this? Let's add the PET-D. Remember, all we need is the bar above the arrow to be green, and as you can see, it was. Now, the bars before were not, but that's okay. It's just the bar above the arrow. It would be ideal if all the bars were green, but that's okay. All we need is this one, and the stock went up 7 points. Ultimately, had a really nice run up. Now, there's some news or some reason caused it to gap up like that. We have no idea because remember, we do not focus on fundamental news. That's part of the noise that my mentors taught me. Why? Because it's too subjective. How many times have you looked at fundamental news and you thought, boy, this is great news, and the stock or currency pair went straight down, right? Or how many times have you thought it's negative news, it's terrible, okay? Some economic indicator, jobless claims, or some earnings report, it's terrible, and the stock went straight up. That's too subjective. We don't want things that are that subjective. We need things that are cut and dry. And that's what the dynamic duo is. Now, if you don't think 7 points was that much in today's market environment, well, remember, that was 300% gain in just 3 weeks, okay? That's a 300% price gain. How would you like it if you were trading Tesla or Google and you gained 300% in 3 weeks, okay, of the price gain? So it's all relative. Here's another example here in RIDE, okay? The stock has been very popular as of late. This is just coming into last week. A lot of traders would have looked at this and said, Steve, you know, I took that $10,000 course on the institutions, and they say there's major, major institutional support here. That indicator they gave me, and I follow all their fundamental information, the institutions are buying. So I can't go against the institutions because they're always right? Well, not really. Let's see what the market is telling us. Remember, we're not focusing on outside sources like institutions or earnings or some guy in a chat room. We only listen to what the market's telling us. So let's see if that market has generated a pattern. We click on strategy number 4, click on signal arrow, and yes, it actually generated a sell signal. So where you're thinking that the institutions are so right in calling a bottom here, the market, the very thing we're trading, is saying, no, I want to go lower. So which side would you take, okay? So obviously we want to sell with this, but we want to take our odds up a little bit. We want to confirm this because we know not every signal is going to be 100% correct. So if we can increase our odds for success, we apply the second portion of the dynamic duo, which is the PET-D. Click that on our upper green strategy tab, and the colors will change. Now, in order to take this with a bit of confidence, the signal bar below the arrow needs to be colored red, which it was. So this gives you the confidence to take the trade, even though all your friends or all your other trader friends are telling you, well, Steve, you can't go against the institutions, they're buying this. But this gives you the confidence to take that, and 7 points. And look at the big drop down here the other day. This was on the 12th. I believe that was on last Friday. All right, let's look at AMTI, okay? Applied Molecular. Now, this is a perfect example for all the traders who like to trade support and resistance. This looks like major resistance, right? You can't touch this thing yet until it breaks out. Most likely, it would probably be better if you shorted this because this is major, major resistance. Well, what is the market telling us? Well, it already generated a buy signal well in advance of that, and it was confirmed by the PET-D because it was outlined green. Remember, even though the bars before were red, it makes no difference. All we care about is the bar above the green arrow. So since this was green, this would have given you the confidence to take the trade regardless if you thought there was support and resistance. Doesn't matter. We don't teach support and resistance as specialist trading. Why? Because once again, there's absolutely no consistency in that style of trading. It's too subjective. One trader's support is another trader's resistance. So why trade things that are not cut and dry? We want to trade things that are more black and white. And the dynamic duo is, it looks for the pattern, it looks to confirm the pattern. And 12 points coming in later on in the week. As we look at XL and X, once again, doesn't look like anything's happening here, but strategy 4 generated a sell signal. To confirm it, we apply the PET-D, and yes, in fact, all the bars are red. So even though it doesn't matter, it gives us a little bit of confidence to know that all the bars have been colored and painted red. So we take this sell signal, and the stock fell 18 points in 4 days. This was coming into last week, okay? How about CTAS? All right, a buy signal was generated in order to have that added level of confirmation to filter out if it's a bad signal or not. We apply the PET-D, and it's colored green. So this can give us the confidence to take the trade, and the stock went up 23 points coming into last week. As you notice here, we're having sell signals, we're having buy signals. You know, the market doesn't all have to go in sync and in concert together. Sometimes on the very same day, you'll see a number of stocks generate buys, a number of stocks generate sells. That's okay. It's up to you to decide how you want to trade it. As you look at TTWO, okay, Take Two Interactive, a sell signal was generated, confirmed by the PET-D, 18 points in 3 days. Once again, last week. Let's look at that original snapshot we showed you in the beginning of today's presentation. Remember, we said that most traders would look at this and say, hey, Steve, this is a range market. I've always been taught, stay away from range markets. You'll buy at the top and you'll sell at the bottom. It's a whipsaw environment, so why get involved in that? Well, That's the analysis coming from an outside source. What is the market telling you based on market behavior? The market behavior is strategy number 4. So the first thing we do is apply the method that generates a signal, strategy number 4. Click on strategy 4 tab. In the drop-down menu, click on signal arrows, and we see that a buy signal was generated right in the middle of that so-called range market. So you're saying to yourself, wow, okay. So even though it looks like to the outside world we're in a range, the market is telling me, according to this pattern, it wants to go higher. But in order to really get that bit of confidence, let's apply the confirmation tool, which is the PET-D. Click on the PET-D because the second method confirms this signal. Once we click it on, we see that not only is that bar above the arrow, but all the bars have been painted green. So this is a very confident sign. So even though you may be saying, or some guy in a chat room is telling you that you're in a range market, the market is saying, I beg to differ. Even though I may be going sideways, I'm getting ready to coil up and go to the upside. So that was a very confident, high probability buy signal on the 12th of February. And as you can see, coming into March, the stock was up 28 points higher in just about a week or so. This is how simple it is to be consistent. Why? Because for the first time, you're taking charge of your own trading destiny and learning how to listen to the market. You notice here, I have not mentioned anything about any of this being based on earnings, any of this being based on economic factors, any of this being based on support and resistance or the institutions. None of that is. I did that hard work for you 44 years ago. I traded using those things, and I'm here to tell you they didn't work. So they're not about to start working 44 years later. Trust in the market. It tells you just about everything you need to know. Remember, that's the first thing my mentors taught me. All right, let's look at SPC, this Virgin Galactic. Now remember, the PET-D can be used to confirm a signal. It can also be used to filter out bad signals. Let's look at this example right here. Now, the first method generates a signal. So we look for that pattern, which we teach you how to identify in the course. Remember, this is not a black box system. This is a strategy. So you have to learn the rules. So to check your work, you would click on strategy 4 just to see if you're in line, because you can't call me up at home and say, hey, Steve, but can you take a look at the SPCE chart and tell me if there's a buy signal there? So what you can do is check your work using our platform. That's why we developed it, to make it simple. Click on signal arrows, and you're correct. You spotted 2 valid strategy number 4 signals. So you're feeling good about yourself. You're saying, you know what? I feel really good. I know how to properly identify these. Now, you could take these on your own, but that's the beauty of the dynamic duo, because it'll filter out and confirm the good signals from the bad. So once we apply the PET-D, the second method will confirm it. Click on PET-D, and as we can see, both the bars are colored what? They're red. They're outlined red. So what is the PET-D, which is basically a translator? It's translating based off a proprietary method, a proprietary calculation. What is it telling us? Not what is some guy on TV telling us after the market closes, or some guy in a blog, but what is the market telling us? It's telling us, don't take these signals. They're not confirmed, okay? So you didn't take them, and guess what? You would have saved yourselves a potentially 20-point loss. So this is the beauty of the dynamic duo once again, because many times you will have signals that are generated, you looking for that pattern, but the PET-D saves you oftentimes because it will not confirm it. Now, as we see here in Costco, 3 signals were generated. Nothing much really happened, but they were all confirmed with a PET-D, but ultimately it kicked in and it went 50 points to the downside in the first week of this month, March. Now, as we look at Boeing, okay, a buy signal was generated. It was valid buy signal, and it was confirmed by the PET-D. This was coming into March a couple of weeks ago, 40 points coming into last week to the upside. So in a couple of weeks, BA went up 40 points, a nice little trade, right? You could have purchased the options. You could have purchased the stock if you wanted to. Remember, in our courses, we did not tell you which vehicle you should be using to enter into a trade. In other words, if you want to buy options, some type of a spread, or if you want to buy an odd lot of the stock, that's your choice. Remember, you should be in charge of that, not us. This is not an option course. It's not a stock course. We're just pointing out these high probability setups that occur over and over again in any market and in any time frame. Now, oftentimes it'll take a while for a signal to kick in. As you see here, this is a valid and confirmed strategy number 4 and PET-D or dynamic duo signal. Okay, it's a sell signal and it's colored red. Oftentimes it takes 2 weeks, sometimes 3 weeks for it to kick in. But look what ultimately happened. The stock fell on a big gap to the downside based on some news, probably 26 points. Remember, we do not follow news. So someone would say, well, how did you know that thing was going to drop like that? We didn't. We just listen to the market and it tells you what it wants to do. We don't predict how high or how low something will go, but if it's telling us it wants to go lower, we can stay short if we want to, if it's a sell signal. So some signals may take a while, whereas others, as you see here in MORF, this was coming into March of this last month, nothing much happened here, and its signal was generated the last day of February, and in one day, though it was confirmed, you had a 57-point gain. So oftentimes, you'll have a nice profit in one day. Other times, you may have to wait. It all depends on the market. Remember, we're not predicting anything, and we're not telling the market what to do the way so many other strategies do. How many times do you purchase a strategy where it says, you have to sell here because if it gets up to this point, it's gone up way too high and it has to stop. Or you have to buy here because if it gets down so much percentage, it's going to stop there. Okay? That's silly. No one knows what markets are going to do, and we shouldn't. We should only be following along with what they want to do. Never try to second guess the market. It'll be a very expensive lesson you'll learn. Trust me. As we look at ISRG, right here, this was just last week or so in March, a sell signal was generated, confirmed by the PET-D, and as we see, 65 points in just 4 days, okay? So you've seen some really nice examples that happened within the last week or two, some in the last month. Let's look at some more examples applied to other markets because we know not everyone just trades stocks. For example, let's say you trade stocks, but you like to trade ETFs, okay? Well, here's the ETF for gold, GLD, all right? This was in mid-February. Gold had been rising, but then strategy number 4, based on the market pattern, generated a sell signal. Now, in order to validate that, you click on the PET-D, and as you can see, below the red arrow, the bar was colored red. So that gave you the confidence to short gold. Or if you were long gold, time to get out. That would have been a wise decision because coming into last week, this ETF and gold had fallen 15 points. Let's say you trade intraday E-mini futures. Here's a 30-minute chart of the E-mini futures. This was on the 11th. This was last week, last Thursday, I believe. As you can see, it looks like nothing much is happening, kind of going sideways on this 30-minute time frame, but 2 strategy number 4 buy signals were generated. When we applied the PET-D, we see that they were both confirmed. They were both outlined green. And then coming into that morning on the 11th, we had a nice little bounce there. Funny how that happened, right? 34 points in just 5 hours. So in one day, basically, you could have made potentially $1,700 per contract. That's trading the E-mini futures. How about if you trade currency pairs? Here's a 4-hour chart of the euro dollar. This was the first week in March. Okay. Obviously, in hindsight, the currency pair has been going down, right? But how could we have known that to get short? Well, this is the beauty of the dynamic duo because strategy number 4 generated a sell signal. It was confirmed and it fell 200 pips in the next week. That's roughly $2,000 per unit that you potentially could have made. So let's go over one last time the process, okay? As we look at this weekly chart of Bitcoin, we've all seen that Bitcoin has been rising steadily. For the last couple of days or so, it's been going lower. But going back to last year, almost a full year ago, Bitcoin was basically going sideways on a weekly time frame, okay? So most people would say, well, there's nothing much to do here. I think this thing's run out of steam. It had a big move a couple of years ago, but I think it's over now. All the excitement is gone. Well, maybe not. That's once again coming from an outside source. What is a weekly chart of Bitcoin telling us? Well, strategy number 4 looks for that pattern. And since we taught you what to look for, let's say you were able to identify some buy signals. So in order to check your work, even though you thought it's a sideways market, remember, the first method generates a signal. So you check your work on strategy number 4, click on signal arrow, and you're right once again. You properly identified 3 buy signals. All right, this is before anything happened in Bitcoin. A couple of them were in June and July. The last one was in September. These were weekly bars. Now, in order to confirm them, The second method confirms the signal, which is the PET-D. Click that on, and we see that the bars above the green arrows were all colored green. So these were all valid signals you could have taken in Bitcoin on a weekly basis, and as you can see here, Bitcoin rose for the next 8 months. So it's as simple as that. You really just have to listen to the market. The market tells you everything you need to know. So once you're able to filter out that noise, like earnings, like chat rooms, like support and resistance, like institutions, like volume, like so-called trading gurus, and listen to the market, that's when you'll get onto that road to consistency. Okay, so let's recap. First thing you want to do is apply strategy number 4, based on a very simple pattern that appears over and over again in any market in any time frame. Has a high probability of success, but there are still some signals that will not work all the time. It's just the way things are. So if there's any way to filter out them, we want some type of a method that's able to confirm if these are valid signals or not. And that's where we go to the PET-D. This is our confirmation tool. It filters them out. The PET-D is a proprietary tool I was introduced to on the floor of the exchange some 40 years ago. It's a calculation, something that you have to actually manually calculate on a tick-by-tick basis, but we've taken the hard work out of it for you and made it into a color bar algorithm. So all you need to do is simply apply the PET-D and look for either green bars to confirm a buy signal, red bars to confirm a sell signal. When you combine these two real high probability methods, you have what we call our dynamic duo. Okay? This is one of our most popular methods, very popular in all markets and all time frames, and you can learn how to apply it on the PTS Primo Charting Platform. So ask yourself, do you think these two edges, Strategy 4 and the PET-D, can help your trading for the remainder of 2021? I think the answer is yes. So because of that, we have a great attendee discount for all of you today. We're going to offer you our Dynamic Duo Special. This is strategy number 4 along with the PET-D. You'll get instant course access. You'll learn all the different entries, exits, and stop placements for strategy number 4. Also, you'll learn different ways to apply the PET-D, totally aside from the Dynamic Duo, different ways to trade with it. All right, this is all included. Now remember, we said the best way to trade this is on our platform. So we really want you to use the PTS Primo Charting Platform for at least a year. Now a year is going to cost you close to $1,800, but we're going to give you a great discount today. We're not going to charge you anything. We're going to throw on a full year of the PTS Primo Charting Platform for free. So you can use that with the Dynamic Duo. But see, we don't just stop there. You're not going to just get strategy number 4 and the PET-D on the platform. Excuse me. You're going to get a lot of our other tools and indicators that I've accumulated in the last 40 plus years. For example, you'll get our signal scanner. You'll also get our strength of trend tool that can determine the strength of any trend and tell you whether it's still got momentum left or if it's running out of steam. But here are 2 of the best things I think included on the platform that you won't find anywhere else. These are our proprietary exit levels in combination with the scanner, because you can scan for nightly signals, and then you can also use our proprietary exit levels on the platform. Now we give you upwards of 6 or 7 different ways to exit. Here's just one of those different methods. As we look here, that a signal was generated in Oracle on the 22nd of February, just about 2 or 3 weeks ago. A buy signal was generated with the Dynamic Duo. It was outlined green. And if you're not really sure about where to exit, if you don't know if you want to get in and out quickly, or let's say you want to get as much bang for your buck, click on strategy number 4. Instead of clicking on signal arrows, because you already know it's a valid signal, click on range extension exits. This is just one of the methods we teach you. As you can see here, it highlights the different areas for exiting. Now let's say you wanted to get in and out of the trade quickly. Well, you'd probably place a limit to exit here at the first level. If you are a moderate trader, you'd exit here, and if you wanted to get more bang for your buck, you'd exit here. So let's say you thought it was coming up to this level 73, you placed a limit to sell, and a couple of weeks later, you got out. That's a nice trade, right? And then look what happened. You see the beauty of using our exit levels, that oftentimes they'll get you out right at the precise moment. Here's another example, an old example in DKNG DraftKings. A buy signal, a Dynamic Duo buy signal was generated. Once again, it furnished you, prior to even entering the trade, you know where these exit levels are. In this case, there were 4 exit levels. Let's say you thought it was going to come up to 62.35. So you placed an order to enter, and then once you got filled, you placed an order to exit at 62.35. Well, look what happened. You would have exited in about 3 or 4 days with 10 points. And then just when you thought it was going higher, the stock fell out of bed. So this is the beauty of using this. You'll only find this on the PTS Primo Charting Platform. It comes with your 12 months, along with a dynamic duo, the scanner, and along with a host of other tools and indicators and techniques that I've accumulated that you won't find anywhere else. These are usually trading methods that I picked up from the trading floor, okay? So let's break this all down. Remember, you're getting strategy number 4, the PET-D, and a full year of the PTS Primo Charting Platform. Now, with all this included, normally the price would be, if you just purchased this separately, it would be close to, I'd say, $5,000 or $6,000. For example, strategy number 4 would cost you roughly $700. The PET-D would cost you, I'd say, about $3,000, and the PTS Primo charts, as we said earlier, close to $1,800. So if we combine these all together separately, it's going to cost you $54 or $55. Okay. So we don't want to make you spend that much money. Why not? I mean, why would we do that? Try to be an educational company and offer these things for an arm and a leg. Why not discount it? So here's the great offer we have for all of you attending today. We're going to offer the Dynamic Duo Combo along with a full year of the platform for a one-time payment of less than $500, $497, and then just $97 per month. Remember, that includes a full year of the platform. The full year of the platform, remember, is close to $1,800 alone. But for less than $500, you can be up and running today and then just have a monthly payment of $97. That's it, okay? Now, a lot of our students say, Steve, I don't want a monthly payment. I'm sold. I'm ready to go. How much do I have to pay for this in full? $5,400? No. If you want to pay in full, we'll discount even more, about $2,000 down to $2,995, okay? So that's still a great, great deal. So if you want to take care of it all in one payment and not have to worry about monthly payments, it's all yours for $29.95. This is a great, great offer. This also comes with educational correspondence. That's corresponding with yours truly, and I can answer any question you may have. So this is a great, great offer. Remember, we're already into the first quarter of the year. Can you believe it? We're halfway through March, the first quarter of 2021. So you owe it to yourself to take your trading to the next level in 2021. If you're still not seeing the kind of results you want, take advantage of this great discount. Less than $500, one-time payment, and then $97 per month, okay? Here's how to take advantage of this great offer. Contact Pro Trader Strategies. They're my sister site. I developed a platform with them. They're in charge of all the pricing and discounting of all my courses. You can email them at trading@protraderstrategies.com. I would suggest calling them directly if you have questions concerning the price or concerning the platform. They have trading consultants manning the phones. They're very flexible. They would be more than happy to give you a quote. I'd be more than happy to take your order over the phone if you're interested. You can call them at 310-598-6677. Now that link you see below them, below the number, will take you to the sign-up page and the information page online, but it's not a live link. But you can go to the chat box on the far right-hand corner of the GoToWebinar column, and you'll see we've posted a live link right there, okay? Now, I promised you I would answer any questions you have, so go to your question and answer table and ask me questions, and I'll leave this information up here if you want to copy down the number or the link, okay? Gladys asks, what platforms support this strategy? Oh, good, a great question. Yes, along with this, if you want, we will supply you with the add-ons for this. So in other words, the add-ons are the being able to download the up and down arrows along with the green and red bars for PET-D. So if you want to use it on your platform as well, the main platforms are, you may want to write these down, TradeStation, Metastock, MT4, Sierra Charts, Thinkorswim, and NinjaTrader. Now there is a few small minor alterations you have to make with Thinkorswim, but our tech support does that for you. So those are the major platforms you can apply with. Now there may have been some I've forgotten. I'm not sure about eSignal, but I think there is a way to do it with eSignal. But I would contact Pro Trader Strategies because once again, they're in charge of all the tech support. There's absolutely no obligation just to find out what platforms you can contact them, okay? Does this system tell you where your stop loss and take profit levels are supposed to be? Yes, it does. Remember, that's all included in the course. So just let me differentiate between what we teach. We don't teach systems. A system is basically a black box type of method, meaning that everything has to be done the exact same way every time. Why? Because if you do the exact same thing that a number of other students are doing and entering at the same place, exiting at the same place, placing your stop at the same place if you get stopped out, that's how you generate statistics and results. But remember, we have always said no two traders should ever trade alike. So therefore, we do not teach nor trade systems where everyone blindly does the same thing. We teach and trade only strategies. Now, strategies are very similar to systems in that they're rule-based, but they're roughly about 70% rule-based, and they leave about 30% room for discretion. Now, discretion does not mean you wake up one morning feeling lucky, so I'm going to bet the farm. That's not what discretion means. Discretion means insight and experience and different ways to what we say call an audible. For example, when if any of you are familiar with football, the quarterback calls a play in the huddle, okay? And then he walks up to the line of scrimmage, and if he sees that the defense has shifted and changed, well, maybe that play is not going to work after all. So what he does is he calls an audible. That means he's telling his front line and all of his other players to change things and alter the play a little bit because the defense changed, all right? That's the same concept we use with strategies. Now, even though we may have a strategy number 4 signal being generated, let's say there's tremendous volatility, which means there may be more risk. So perhaps you want to change where your entry point is. Perhaps you want to change where your stop placement is, or perhaps you want to change where your exit is. So this is what we mean by discretion. It's not meaning that where, oh, I just feel like this is going to happen. What's it based on? I just have a feeling. That's not what discretion means. Discretion is an insight and an observance and awareness of how the market is acting that particular day. And we show you different ways in which to do that in the course. So to answer your question, once again, we teach upwards of 6 or 7 different stop placements, 6 or 7 different entry points, and 6 or 7 different exit levels. I just shared with you one of those exit plans that is automatically on the platform. These are all ways for you to make your own trading decision. Remember, at the beginning of the presentation, I said one of the reasons why traders fail so much is because we blindly follow along someone or something else. Well, it doesn't work in our favor if I blindly tell you where to buy, where to sell, where to exit on every signal. No, we want to provide you with a host of different variables so that you can ultimately decide. Once again, in my opinion, in 44 years of trading, the only way one becomes a consistent trader is by making their own decisions. So we provide you with all this information, but ultimately you have to decide where you want to get in and where you want to get out, okay? What brokers support this? That's a good question for pro trader strategies, okay? I know, I believe TD America and who else? Interactive Brokers, but I would contact Pro Trader Strategies because once again, that's more of a tech support issue. Okay. Let's see. Is there a recording? Yes, it is. You must have come late, but we record all this, and all of you will be sent a link to this recording at some time later on today. Okay. Can I start monthly and upgrade to a lifetime? Will the $4.95 get applied to a lifetime? Well, you know, like I said, Pro Trader Strategies is in charge of all the pricing and discounts. They're extremely flexible. You know, we're a small, average-sized company. We're not going to try and you know, get you bogged down in the bureaucracy and say, no, you know, we have people that have to pay this, and just so that we can keep the numbers all. We're more of a mom and pop store, so we are ready and willing to listen to anything. So I would really suggest calling them if you have questions about discounts or how much you can come in with. At 310-598-6677. They're more than happy to work with you. And you can get a quote over the phone with no obligation. Remember, there's absolutely no obligation if you want to call and talk to one of their representatives, okay? Last question. How would we know how far up or how far down it projects to go? Well, first of all, I don't know if you came in late. Remember, we do not project anything. That's you know, that once again is deciding what the market's going to do. Our philosophy is to listen to the market, not project what it's going to do. We just listen to it. And if it tells us it wants to go up, well, then we put some structure to it. And that's what you do with trading. You're basically not predicting anything, but the professional traders don't ever try to predict predict or try to project where something's going to go. They'll just simply go along with it and then add some structure and some blinders in places to get in and out according to your own means. So let's say we provide you with different exit levels, and let's say you're risking 5 points. Well, maybe if you want to have a 2-to-1 risk-reward ratio, you'd exit at a 10-point gain or higher. That's your choice, though. So see, it's not a projection. It's the decision based off insight and based off of learning what we teach you. Remember, we are an educational company. We're not here to tell you how to trade. We're here to teach you so that you can make your own decisions. We truly want you to become consistent. And if I, taught you exactly what to trade and what to buy or sell, that would be doing you a disservice. You have to find your own way, okay? But if you're still not convinced, go online, look at all the many testimonials of our students around the world who have, for the very first time, become consistent traders, okay? This is what we do, and hopefully we can turn your trading around as well. Now, one last question. Someone's asking about the educational correspondence. That's simply my personal email address. You'll get my personal email address, and I will answer your questions as fast as I can. Sometimes I have just dozens of emails from students, so I have to answer them in the order they were presented to me. Other times I'll just have 1 or 2, so I'll answer it right away, but I'll do my best to get it back to you as soon as possible, okay? So as we close here, I just want to say thank you so much for attending today. I hope you see the power of the dynamic duo, how simple it is to apply, but how powerful it can be. And I'm sure you know by now why it is one of our most successful trading packages around the world. We have students trading this in Europe, in Canada, and in the Far East, as well as in the United States, every state in the United States. So come on board. I look forward to all of you becoming students of mine as we take one last look at our disclaimer. And I look forward to all of you becoming students of the Dynamic Duo course. Thanks so much for taking time out of your Wednesday, and I hope to see you in class. Bye-bye.